Hey everybody, thank you guys for tuning in. It's Shamika. Please like, subscribe, and share my videos. I appreciate you all. Your support is very, very welcome. Well, I wanted to chat with you guys a little bit about cancellation of debts, okay? The reason I chose this is because you guys know I talk a lot about how to save money, how to get more money, put more money into your pockets, kind of beat the government at their own game. So I want to talk about Irs Publication 4681, okay? And I'll say that again, Publication 4681. And this publication is issued by the IRS. Normally these are remade annually, but this is the most recent one, dated for 2021, and I wanted to go over this with you because a lot of you guys are going to be paying off debts. You guys are in school, and you're going to find that some of your student loans are going to be canceled, and some people may lose their home to foreclosure. You may file bankruptcy, and these things that are in this publication, you guys should know. Since I know a lot of people aren't going to read about it, let me give you the rundown or the gist, okay? So, Publication 4681, of course, again, this is a publication made by the IRS that talks about cancellation of debts, foreclosures, repossessions, etc., okay? Basically, it is telling you that you or what you should do if you are issued a 1099-C, okay, as in Charlie. If you receive a 1099-C, that is a cancellation of debt form. Now, I'm going to tell you how it works. Say you have a debt collector on your credit report and you say, I'm ready to clean up my credit, get my life together, get it right, pay off some of these old debts. I'm going to call up my, collector and I'm going to settle. I'm going to opt to pay less than what I owe. Say, for example, that amount that you owe is $2,000, but they settle with you for $1,000, half of it, right? That means you still have another $1,000 out there that the company says you're still responsible some way, somehow to capture this debt that we are letting go. And since we are going to forgive the $1,000 that you paid, we're now going to issue you a 1099, and you now have to claim that $1,000 on your taxes as income. Okay, so if you make $20,000 in 2022 or 2023, however you want to say it, at tax season next year, you now need to add an additional $1,000. Okay, so why does this matter to you? Well, it matters because depending on the amount of money that was forgiven, once that amount is added to your income as income, it could push you into another tax bracket. Why does that matter? Because now you're going to owe more taxes. And why does that matter? Because if you didn't pay enough taxes, now you may owe instead of receiving a refund. Okay? That is what a 1099 is in a nutshell and how it affects you if you're an individual, and this debt is individual. Okay? There's tons of debt, business debt, of course, and personal debt. The IRS likes to call it recourse debt, which is for personal, and non-recourse debt, which is for business. So if you get a 1099 for recourse debt, which is personal, and you get a 1099 at the end of this year, and I'm saying this to guys because I know a lot of people are paying off their debts, and I'm very proud of you, but you do need to know what happens on the back end. Is your debt collection company going to tell you this? No, they're just happy that you paid something, all right? So you really are kind of faced with the option when it's time to fix your credit. Should you just fix your credit, and pay these things off and possibly have a 1099 issued to you and added to your income? Or do you say, forget it, I'm just going to let it sit and time out where the statute of limitations no longer applies, I can't be sued for it, and then I'll take care of it, okay? Or you can say, I'll just let it sit until the 7 years go by, which is a different statute of limitations, but you do have your options, okay? Now, on the 1099-C, it looks very similar to a regular 1099. If you guys are an independent contractor or you're self-employed and you've seen them, they're very similar, okay? Something that this 1099 C may have that your other forms may not have, it's going to have a code so that when you bring your forms to your tax preparer, they can put in the reason the debt was canceled, okay? Now, if you are an individual who is a student, say your loans are part of the Navient loan, the Navient lawsuit, where a lot of you guys are going to get your loans dismissed. Say you're a part of ITT Tech, Corinthian colleges. I can run the gamut of list of colleges that are, have been found guilty of lying, and now the students, you guys have to go and wait for your student loan forgiveness. Here goes something that you did not know that is in this publication 4681. Publication 4681 also says that individuals who have their student loans forgiven or canceled, you will not have to add that income or that amount that was canceled as income when you file your taxes. Now, I'm telling you this because any company can issue you a 1099, but you, as the taxpayer, or hopefully your tax preparer, should understand which debts should be included and which debts should not be, meaning excluded, okay? And if you had your student loans forgiven between the dates of, and hold on, I wrote them down, December 31st, 2020, all the way to January 1st, 2026, okay? So you guys got about a good solid 5 years and a day, okay? So if you have gotten your loans forgiven anytime between now and 2026, make sure you write that down, because I want you to tell somebody, because I know somebody's going to bring this conversation up and they're probably going, what am I going to do? Let them know that they do not have to include that income or that amount that was forgiven into their income when they file their taxes. That does not count. Why? Because it was included in the CARES Act, that they would not be counted, and you will not have to add any income, for this amount. So you're safe. And if you don't believe me, go and get publication 4681 and you'll see it within the first 3 pages. All right. Now, let's talk about student loans when an individual pays them off for you. I actually had this happen to a customer that came to me and said, hey, I filed my taxes, I paid taxes. Matter of fact, I pay more than I should. Why do I still owe, or why did I get a letter later on from, the IRS saying I owe $4,000? Easy. Took a look at the paperwork that she was given from the IRS, looked at her taxes, and then it was very, very easy to see, especially if you're someone that knows or is trained to know what to look for. Someone paid her student loans off as a gift for graduating, for doing a good job. And although that was very nice of them to do, the student, which is the taxpayer, had no clue that once somebody pays off your debts for you, you are supposed to count that money that they paid for you as income. That's right. It's unfortunate because now this person has to now pay the taxes on what they would have paid had they added that money back when the act was done. So once this person paid her taxes in 2020, in 2021, when the individual went to file their taxes, they should have added an additional amount that the person covered and added that amount to their income so that they can be pushed up into a higher tax bracket, so that the IRS could request more taxes from this person in exchange for having this person pay, their loans off. At the end of the day, the government wants their money. So if someone's doing a favor for you, paying off your bills, especially student loans, the government wants to know, well, somebody did that for you. You should, we need to tax that. How can we get some money out of this? And that is why they made it that if someone pays it off, so grandparents, friends, if you want to reward the students by paying off their student loans, that's great. But please make sure that they get some type of documentation. A 1099 should be issued to them, okay? Although they did not work for you, you could issue them a 1099 so that they can include that income onto their taxes, so they can be pushed up into the higher bracket so that the IRS can get their money. So make sure you guys are aware of that, all right? Let me see. Another thing that the publication talks about is bankruptcy and insolvency. Okay, this was probably the biggest shocker to me. Possibly because I never opened up this book to actually know that there's a form called 982. And I want you guys, if you get a chance, to look up IRS form 982. This form is a form where if you do have canceled debt, whether that is your student loans, whether that is you paid off something from the debt collector, or you went and you filed bankruptcy, or you're insolvent. And I'll explain the difference between bankruptcy and insolvency in a second. But you would use you use form 982 to report that amount so that the IRS knows that this amount should be excluded, as in not counted, okay? Now, if somebody pays your student loans off of you as a gift, you should report that. That should be included. But say you took a government job and the government job says, well, if you work for us for these many years, as a part of being hired, you get student loan forgiveness. If you get student loan forgiveness for a job, if you get student loan forgiveness because of a program, that is the type of information you would put on the form 982. So on a form 982, you would simply separate this form into two sections because there's only two sections. The first section is basically going to ask you to check a box for whichever situation meets your situation as it pertains to why you are canceling or excluding this debt from your income. Give you an example. Say you do a bankruptcy. Say you do a Chapter 7, it's the easiest one. You're wiping out all of your unsecured debt. Say your unsecured debt is $20,000. Now, had you paid some of that money to the debt collectors, whatever was left over that you didn't pay, that is what you would add to your income. But since you discharged that amount of money in bankruptcy, you don't have to add it as income, but you do have to put it on form 982 and add it to your regular 1040 taxes so that you can let the IRS know that you were in a bankruptcy. Mind you, if you go into a bankruptcy, they're going to know anyway because they're on the list of individuals that find out whether you want them to or not, okay? So you cannot avoid the IRS knowing you filed bankruptcy, but they're not gonna dig into your bankruptcy to find out everything that you put into it because they rely on you to do that yourself. So if you wiped out $20,000 in debt from bankruptcy, you would check the box that says that you discharge your debt because of a Title 11 case, and the Title 11 is the title of the United States Code that talks about bankruptcy. So it's any type of a personal bankruptcy. So that is 7, 11, and 13, okay? So any of those three bankruptcies are under Title 11 of the United States Code. So you would check the box that says you participated in, what does it say? You participated in a discharge of indebtedness in a Title 11 case. You would check that. It'll ask you how much. You would put that amount down. And that's it. Of course, you put your name and your social so it knows who it belongs to, but that would be attached to your taxes. So if you are using a software, you need to find out, especially if you're someone who's filed a bankruptcy, find out if your tax preparer can upload. If not, guys, what's going to have to happen is they're going to have to print your tax return, your 1040, and print this form. You're going to have to sign and mail all of it to the IRS. Now, that's great that you can mail it. They're going to get everything, but it's not e-file, which means it's going to take more time to process, all right? So if you can upload the document, that would be best. So I would say print it out, fill it out if you can. If not, see if this form is included in the tax software so that it can be just added automatically. If not, it will have to be uploaded. If you can't do that, you're going to have to print and mail. Now, question, do you have to do this? Yes, you should do it. I will never say you have to because the IRS is never going to say you have to. What they like to say is that they want you to for information purposes because remember, everybody else, creditors, debt collectors, whomever, they're issuing information about you to the IRS. You should also be issuing information about yourself to the IRS that matches what they send. This way, you can cross your T's and dot your I's. So I know a lot of people feel like they're getting all in your business, but in actuality, all you're doing is verifying that people who are talking about you, they're telling the truth. And I could tell you, you probably won't care because it's your debt, but you would care if somebody was saying something about you. So keep that same energy, okay? They're talking about you. They're still gossiping, okay? They're talking about you, they're lying, or they could be telling the truth, who knows? But your job is to make sure that you file everything you're supposed to so that when it's all said and done, everything matches, all right? Now, we don't know if they're ever gonna try to come back later, and I mean the creditors, and say, oh, well, we discharged his debt, now you got to pay us. In a bankruptcy, that would be very difficult. You could easily prove it by having your paperwork, but I still say you should do it because they didn't create this form for nothing, all right? So if you did file bankruptcy, and say you did it and it was within the last 3 years, remember, you have 3 years to edit your taxes or amend them. So if you've done it in the last 3 years, and you've already filed your taxes, you've already got your return, just go and amend your taxes and add this form and put the dollar amount that you are excluding from your income, because you're not adding it to your income like you would the other debts, but just exclude it and then send it in just so that they have it and that you've done everything that you should do. Okay. Now, what is the difference between a bankruptcy and insolvency? Okay. Now, y'all know I try to make things as simple and easy and very plain to understand. If a person is bankrupt, that means they are broke or having some financial hardship. Let's say it that way. They're having some financial hardship and they are asking the government, your good old Uncle Sam, to protect you and your assets from creditors. But what is insolvent? Insolvent means I'm broke. Period. Okay. So the difference between the two is bankruptcy is saying, hey, I'm maybe broke or maybe I'm about to be broke, but I'm getting help. Insolvency is I'm just broke. Okay. You didn't go anywhere. You didn't go to anybody. For example, if you owe debt to the IRS, you could use insolvency as a reason to get a financial hardship. You can also use insolvency to take advantage of some of these fresh start programs that the IRS has for individuals who have debt that they owe. So please don't think that being insolvent, I'm throwing shade by saying you're broke. It's just you have to use these, you have to use your situations and tie them to the correct terminology that the government uses so that you can take advantage of the programs, okay? If you're bankrupt, a lot of times you're not going to qualify for some of these other programs because bankruptcy took away the issue, which was the debt. But if you didn't do it and you're just broke, hey, meaning my debts, my liabilities are more than my assets, there's no way I can pay, you could use those type of programs to help you. Give you a quick example. I have a customer that has a financial hardship. They're on a fixed income, they get Social Security. They owe the IRS about $7,000. Now, that's not a lot of money to a lot of people, but on a fixed income, elderly woman not working on Social Security, there's not much more income this person can get. Now, yes, she can file bankruptcy, but the reason that she can't wipe out her IRS debt in bankruptcy is because it's not 2 years old. If the IRS debt was 2 years old, she could just file bankruptcy and be done. But because she can't, because it's fresh, she just found out that she owes when she did her taxes, she has to do insolvency or file insolvency with the IRS to get or to take advantage of their hardship programs. Now, she can stay on a hardship, have no payment due for 2 years, and after 2 years, if she chooses, she could file bankruptcy and just be done with the debt altogether. Now, if she doesn't want to, she just wants to stay insolvent because her situation is not going to change, she can, but the IRS has every right to ask at any time to have her re-verify that she's insolvent. And some people don't want to have to deal with that. So if you don't want to have to deal with that, bankruptcy is going to be what I would suggest that you do, okay? So let me see to make sure I went over everything because I don't want to forget anything, okay? So publication 46 81 talks about cancellation of debts and foreclosures, all right? And I didn't talk too much about foreclosures because most time when you do foreclosures, your home is taken, so you're not left with any property. If you're, say for example, you walk away from the house, which can be called abandoning, or if you do foreclosure, or your house get foreclosed upon and the bank takes it, well, 9 times out of 10, there's probably not going to be much that you can report for income, okay? Certain situations apply. It's going to be too deep to get into it here because a lot of you guys aren't even going to qualify to add anything because some of you aren't going to be left with the house. So once it's foreclosed upon, they take it. And if you abandon the home, you're not going to go back to it. So, we'll leave that for specific cases only. But for generality purposes, 1099-C, that's going to be where you have a debt that is now canceled. So if you did work for me at my house, and remember, I'll issue you a 1099 if I pay you more than $600, right? So say the work you did for me is $1,000, but I know times are hard, and I go, man, you know what? I'm gonna let you slide, and I'm just pay me $400. I can issue a 1099-C for the $600 that was not paid. And now that $600 will have to be included as income for that person. So if you are someone that you let somebody slide because, you feeling goodness, you want to be blessed, you want to do the right thing, that is cool. But please, at the same time, don't mess up your financial accounting, okay? Even if you give somebody some grace, you are still supposed to count that as income. Okay, you're still supposed to count that so that they can claim that part as income and be taxed on it. Okay, that's money that came out of your pocket, so it needs to be some more money that came out of their pocket so that it's equal. Remember, checks and balances with the IRS. All right, so if you don't get a break, they shouldn't get one either, and that's just not being funny. That's just how the rules go. All right, you always want to look on your 1099-C to make sure that the codes match. Now, you don't want to have a code for a bankruptcy when you didn't file, or because it was a foreclosure, or whatever the case may be. So you need to make sure that you can, those codes are correct. Debt collectors, they may send you something, may not even be paying attention. They know you're not going to pay attention. They're just going to mail it to you. Some of y'all don't even include them on your taxes, which you should, which is why they turn around and come back years later and get you. And now you have all this interest that you owe because you filed, but you didn't file everything, which technically means you didn't tell the whole truth. All right. So we don't want to forget these things. We want to add them. All right. Student loans. Anyone who has gotten a student loan forgiveness or student loan cancellation of debt or discharge because of one of these schools you went to are BS, okay? Between December 31st, 2020 and January 1st, 2026, you will not have to include any of that, okay? So if your tax returns are slow or not coming, please don't think it's because you owe anybody student loan wise, at least from these schools, okay? Because it says it's in the CARES Act, but it's also in publication 4681 that you will not have to include that. You also will not have to include if you got your loans discharged because of a job program, some type of program that you're in that pays your loans off, or some type of scholarship. You do not include those. You will not have to include those, all right? You do have to use Form 982 if you are issued a 1099-C, if you're issued a 1099-C that cancels debt, but you don't have to include it, okay? So I'll give you an example. Bankruptcy. You're canceling the debt. It's in just discharging it. It's in the bankruptcy. You probably won't be issued a 1099-C, but who's to say that you are not? You might, if you're in a Chapter 13 bankruptcy. Some creditors will settle for a smaller amount to throw in your bankruptcy. They'll claim a smaller amount and have a certain portion that they may say, well, we want to send them a 1099-C. So if you happen to get anything like that, make sure you talk to your tax professional and Publication 4681, but Publication 4681 says if you're in a bankruptcy, you would use Form 982 to report the amount that is being discharged. You can find that from your bankruptcy petition, okay, the amount that you're going to include on that line. You would also fill out Form 982 if you are insolvent, okay? So for example, that example I gave you with the older lady who had the $7,000 that she couldn't pay, because they were generous enough to say, we're gonna give you a hardship, she could fill out tax form 982 to say, I'm insolvent, I'm gonna report the amount that the IRS is allowing me to forgive, okay? Now, if you're doing insolvent, it's 982. It does have a little insolvency, guess you can say a form that you would fill out some information that would help you determine if you're insolvent. Most times, if you're insolvent or you feel that you're insolvent, that is something that somebody else tells you. You don't tell yourself that you're insolvent. That would be, you applied for forgiveness and the IRS said, we consider you to have a financial hardship. You're insolvent, okay? But you can't just say, girl, I am insolvent, I'm broke. No, all right? It has to be someone else telling you that, okay? So again, not trying to beat the dead horse. I just wanted to go over these because I know a lot of you guys are going to be paying off your debts. I'm very proud of you for being able to do that. A lot of you are getting your student loans wiped out. I'm very happy for that because your credit's going to be great. And, you know, some of you are just going through the struggle. And as long as you're taking advantage of those programs that give you hardship, I ain't mad at that either. But what I want you guys to make sure you do is to file all the correct paperwork so that nobody comes back to you later and say you didn't do or you need to do. And because you didn't do, now you got to pay us, okay? And we want to keep all our money in our pockets, all right? So I hope I taught you guys something new. Form 982 and IRS Publication 4681. Please check it out. And if you don't, please make sure that you are paying attention to your tax documents that you receive at the end of each year, sometimes in the beginning of the year, but around the end of each year, you should be starting to see tax paperwork coming to you. And if you paid off a debt during the year, you will absolutely receive a 1099-C. So be looking out for those 1099-Cs. And if you don't know what to do with it and you're unsure, make sure you hit me up. So drop down in the comments and let me know if you guys have ever gotten one. And you don't have to tell me what you did with it because people reading, but just let me know if you ever gotten one and were shocked and surprised. I know I've gotten some and I was shocked and surprised because I had no idea that they were coming. They didn't tell me, but now I know, and now I know what to do with them. So I'm helping you know what to do as well. So thank you guys for tuning in. Please like, subscribe, share my videos, and make sure you guys watch me live on Mondays at 7 p.m. because I'm always bringing you information just like this, and you can ask me your questions live. All right? Have a good one. Bye.